YouTube and then we'll get started. Okay, and we're live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Oh, there's somebody. Please, can you make sure that your microphone is muted? As I've got some background noise. Okay, and we're live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Oh, there's somebody. Please, can you make sure that your microphone is muted? I don't know. Where is some background? Sorry, just give me a second. Good morning, everyone, and welcome to the Crypto Hour. There's somebody. Please, can you make sure that your microphone is... Okay. That's now is sorted. Just a second, guys. Okay. Let me start. Let me just, okay. All right, apologies for this. Okay, let me start straight away from by sharing my screen. Can you see my screen now? Yeah, fantastic. Okay, so this is the first thing I wanted to show you, and why, we've been talking about the the Bitcoin spot ETF. There's been it's now in its in its 11th day of trading. But this is kind of like the reason why this is becoming so important. This is an email sent, and I just got this off Twitter, sent to an financial advisor. Okay, and so it's BlackRock now is starting to market to financial advisors, so that they can then recommend the spot Bitcoin ETF to all the investors. Okay, and generally speaking, so who are the financial advisors talking to? The biggest customers are the baby boomers. Okay, so people they are, born just after the war, so now into kind of like the mid 70s, early 80s, and also anybody that's got like investment funds to invest. So that's kind of like it's a big deal. Okay, and as I said before, we haven't seen the the effect on price yet because of what's going on in this first couple of weeks of trading. But this is what is happening behind the scenes, and this is what's needed to get then cryptocurrency, not just Bitcoin, but cryptocurrency in general, to the next level. Because as we're going from still a very, very niche, let's say, a product and a user base to a mass market one, we have to have people that talk about this at all sorts of different levels. Okay, and this is kind of now that we have BlackRock and Fidelity, with their all huge. I mean, these are money managers that manage trillions of dollars of funds. So now that we have this kind of marketing machine behind it, you will see the effects of it in not straight away, because it takes time to to get this to get this going. But the effect of it, I mean, this is my my expectations, but can never tell 100%. My expectation is that the fact that we do now have the opportunity for anybody, technically minded or not, to invest in Bitcoin. This next bull run is going to be a lot stronger and deeper than we have seen before. So before we were looking, generally at 15 to 18 months. I mean, there is a very good chance that this next bull run will carry on for a good 2 years and take us to a level of proportional increase that's even higher than what we have seen before. You would expect you would expect kind of a product that is nearing, is further on into its life cycle to start slowing down a little. But probably this is not going to be the case as yet because of all of this. Now let's so this is something that I just wanted, because I think it's probably the most important thing that is going on right now is what is not seen. So what's going on in the background, rather than the things that you read on in the news, how many funds are going into these ETFs or not. That's not that relevant right now. But the fact that the user base goes from maybe about, at the moment, 4 to 500 million to it gets like a tick up by 100, 200, 300 million people. It is a huge deal, because we're almost talking about kind of like doubling the user base of people that have access to cryptocurrency in whatever. Obviously, this is not, it's just an investment product. Okay, so they are not interacting with cryptocurrencies as such, but still getting the cryptocurrency name out there in the open. Okay, and the more people talk about it, the more they're comfortable about it. So the better they will be, the easier it will be for them to start investing in it and so on. Now let's again, as usual, let's have a look at the economic calendar very quickly. Okay, so this is what's been going on this week. Not that much, to be honest with you. It's still kind of been quite slow. The Bank of Japan, again, has kept the interest rate negative, so that hasn't changed yet, although they are starting to make noises that this may change in the near future. So in the near future, we might stop seeing these negative rates and start having some. Obviously, it's Japan, so don't expect interest rates at 5%, but we might see these in positive territory in the next few months. On as I said, the other thing, again, Canada kept interest rates at the same level, and there were kind of like GDP figures for the US. There were kind of like a little bit of a slowdown compared to the previous reading, but it exceeded expectations. And today, again, there isn't that much. There's some inflation figures in the US, which this is important because it's what the Fed looks at when making decisions on the interest rates. So it's a different form of inflation that they definitely look at. So whenever there are these announcements, and especially if they vary from the expectations, in the middle column is what analysts are expecting. So especially if you have a different reading here from the expectation, might have kind of like quite a volatile time in the market. So if you do trade or invest, be careful. I would say from 1 to 2 p.m. because you might see quite a bit of volatility. Okay, now the one thing that probably is being quite obvious in the markets. Let me see. I'll get you one. Let me change things a little. So you might have noticed that daily charts. So let me just make a couple of changes. Okay, so you might have noticed that the Nasdaq, you can see a couple of days ago, and the S&P 500 are off to new highs. Okay, so this is this week's. This is where the week started. Things have gone up, have come down. We're still above, so we're still in positive territory for the week, but the markets are hitting new highs. So that's the Nasdaq. This is the S&P 500 again. More significant for the S&P 500 because only recently made new high, where the Nasdaq has been making new highs quite a lot. The S&P just recently broken into kind of like a new territory. Okay, but they say, not all is well, because we see all these figures, everything is going up, all these indexes are going up. The same for the Dow Jones. This is the Dow Jones that kind of like is the least important because he only has 30 stocks in it. Okay, so I don't understand why even it's still reported, because it's not representative pretty much of anything. But the point is that these indexes are dominated by the Magnificent Seven. So if we see, if I can show you here a couple of charts. Okay, so this is the Magnificent Seven. So the usual suspects, Apple, Microsoft, Nvidia, and so on, Facebook, and so on. So as you can see here, this is if you just invested in those 7 stocks, which includes Tesla as well, and Google, obviously, and Amazon. If you just invested in those 7 stocks, your money would have gone up pretty much doubled in 2023. But if you look at everybody else, so all other kind of like balanced funds, equity funds that don't include these 7 stocks, haven't really done very much. I've grown like between 3 to 6%, with some losses as well, if you look at funds that had investment in China in particular. Okay, so so apart from this, if you have to look at this as a representation of the health of the economy, you wouldn't have, if you knew that the results would have been these, you wouldn't have bothered to invest in stocks and shares last year, because you could have got more than 5% just by buying government bonds. Okay, so the risk premium that where you risk your money to invest in something, it's just not there at the moment for the majority of shares in the American market, and the same, we are seeing kind of dangerous signs, not just from the US but from the rest of the world as well. Now, we often talk about financial conditions and what if it's tighter or looser. And this is something like, this is a chart that the Chicago Fed uses. They examine many different factors to get the kind of financial condition index. And although it is kind of, they consider a looser monetary policy, it's just about getting to the to the average value over the past 10 years. So it's not that loose at all. It's just gone back to the average. And if you look at this, these are the conditions, for availability of credit for small businesses. I mean, this is at the moment still in negative territory. Okay, so we kind of like a -8 almost. This is the left-hand side chart. And while small businesses are finding it difficult to borrow money, because the conditions to receive a loan are a lot harder than they were before, at the same time the cost of borrowing has got sky high. So it's gone up from just over 5% to just shy of 10% right now. So conditions for generally for the small businesses, which are the ones that are kind of like the heart of the economy, are really quite tough. And as you know, the Fed has got 2 remits. Okay, one is to keep the inflation at 2%, around the 2% figure, and the other one is to have a healthy labor market. So at the moment, the 2 things that we look at more than anything else are, one is inflation figures, and 2 are like job figures. Okay, at the moment, we had some. I'll show you in a second. We had some figures reported this month that show, a continuing, like yesterday, there was like a continuous jobless figures that is continuing to weaken a little bit. So that kind of the job market is showing weakness, but not enough warrant activity from the Fed yet. But the one thing that is happening, as you can see, as the inflation comes down, these kind of interest rates, the real interest rates that businesses are paying, is actually going up, because the real interest rate is the difference between the nominal rate and the rate of inflation. So it's becoming, relatively speaking, more expensive for businesses to stay in, business if they have to borrow money. And also, when you think about all these costs, small businesses are what employ the majority of people as well in the US, and is what provides a lot of income to a lot of people. So as credit is more expensive, there is less money to then go out and use in discretionary spending. So that as well will put dampers on the economy going forward. Now, just don't misunderstand. It doesn't mean that the job market, everything is going down, and we might see the top 7 company carry on going strong this year as well. But the general conditions, will take, we have to take everything we see with cautions, and not just thinking that because the markets are hitting new highs that everything is hunky-dory. Absolutely not. So this is kind of like just to tell you as well, one of the biggest components of inflation is the shelter. Okay, so the rental housing basically, and there are the kind of, this graph will show you that it's basically the one component that was still showing kind of like inflationary tendencies. But now this is a like a leading index of where this cost is going over the next 12 months, 9 to 12 months, and so this is starting to point downwards again, further reducing the core inflation, and so taking away another worry as well, in terms of inflationary pressures. Okay, so we are, in a way, although the conditions are better than the Fed expected, so they don't need to rush into cutting as an emergency measure. At the same time, the reasons for them to stay tight, okay, to keep the money supply very tight, they're just quickly disappearing, because inflation is not something that is just controlled by the by the monetary authorities, but it is also a cyclical phenomenon. Okay, so especially as we had very high inflations, the last couple of years, so now we are comparing prices to very high levels that we had 12 months ago. So that's part of the reason why we're saying, yeah, inflation is lower. It doesn't mean that things are getting cheaper. It just means that they're not growing as fast. Okay, and I've shared with with people on Tuesday from our community these graphs as well. And this shows you similar conditions to what we experiencing right now, and there were like 3 in the last kind of like 30 years. There were like 3 times where we have similar condition to this one, from the point of view of the markets and the point of view of what's happened before, like a monetary tightening cycle, a pause, like we're seeing right now, and the market's hitting an all-time high. And so you're seeing what the performance has been in the 3 times they have preceded the next, what's coming in the next 6 to 12 months. And the period that is more similar to the one that we're in now is the last one here. Okay, March, June, or March to September 2019. So it's the 2019 example more than the other 2 that we really have to use it as a gauge of where could we see things going from today until, let's say, at the very least in the next 6 months, but it may be towards the end of the year. So if we see here in this column, especially for the six months, as you can see, the best performers in 2019 were gold and the S&P. Okay, but when we compare this with the risk, and so that's to obtain the Sharpe ratio, which is like a It's something that's used, widely in investing, which tells you what's your risk-adjusted return. Okay, once you consider the risk, the best investments that you could have taken in 2019 were again gold. But then the second one, although it's kind of like a smaller return that you can see expected here, was like 6% compared to 7% in the S&P. But when you consider the risk, the treasury bonds offered, at least in 2019, remains to be seen what happens this year, offered a much better return than the investment in stocks and shares. Okay, and this is again just looking at indexes and not looking at individual stocks. So going back now to crypto. So let's see what has happened to Bitcoin. So again, we've been talking this now for a couple of weeks now, right now. Okay, as I said to you last week, what did I say? The best price that I thought we could reach for Bitcoin was about 38,500. Look at this, we licked it pretty much did on Tuesday, and now we've gone back on the actually 40,000 level. This is when this high yearly high was when the ETFs were introduced, the first day of trading on Thursday the 11th. And then we've had this activity for the past couple of weeks where we had a lot of selling pressure on Bitcoin, coming part of it from some of the readjusting in the ETFs, some of the miners putting, just liquidizing some of their assets to pay for costs, and at the same time FTX as well doing their bankruptcy. They had about $1 billion of GBTC shares, which has now been converted into an ETF, which they sold on the market to realize the amount to then use in the bankruptcy. So what's happening in the past couple of weeks? Let's have a look. Let me just see. So it doesn't include yesterday's numbers, okay, but that shows you what's happened in the first 9 days. As you can see, the biggest volume and the biggest lead in assets is the Grayscale Bitcoin Trust. Now, the thing to understand, if you're not familiar with all this, the Grayscale Bitcoin Trust existed before the ETFs were approved. So it's now being is being changed from a trust to an ETF. So all these funds, they had about 25 billion worth of assets in Bitcoin before the 11th of January. And now what's happening is that because they got there's two reasons. Okay, first of all, they have the highest fees of all 10 ETFs, about 1.5%, compared to most of the other ETFs at the moment. They got no fees because they use it to get money, to get investors in. But then once they will start charging fees, it will be between 0.2 and 0.4%. So you see, at least 4 times more expensive than all the other funds. They are freely available now in the market, so it doesn't cost you anymore. And the second reason as well is that for many years it was very difficult to get out of a Grayscale trust without paying a heavy discount in a way. So you couldn't sell your Bitcoins at market value, but you had to accept quite a substantial discount. Now that's been converted into an ETF. There isn't that barrier to exit anymore. So pretty much now it's they can get out of this and market value. So some funds are being realized, like in the FTX case, and some funds have are now being reinvested in the other ETFs. Okay, but still, at the moment, we got 20 billion in Grayscale and 5 billion in all the others put together. What we're starting to see, though, although this is, a relationship of 5 to 1, you can see the daily volumes now have grown. So the other nine funds now have got more than half the volume of Grayscale. And this is changing every day. So every day these outflows from Grayscale become smaller, but so also they become smaller, the inflows into the other 9 funds. Okay, something that I just want to put into perspective, because at the moment you just see numbers, yes, this is 20 billion, this is almost, this is the BlackRock fund and this is the Fidelity one. Okay, so we got after 10 days, this is just remember, this doesn't have the figures from yesterday. So we have 2 funds that accumulated almost 2 billions in investments, and we got another 2, the Bitwise and the ARK Invest. They are now over $500 million. Okay, this is amazing. By ETF standards, as I say, these Bitcoin ETFs have done better than the other 520 something ETFs that were launched last year. Okay, so this is something that ETF managers would dream of. Okay, now obviously it hasn't reflected in price, and at the moment we have to have kind of like these funds, unless Grayscale comes out and at a certain point decide to reduce their fees at the level of all the others. We will have to see this distributed, before the effect of this starts being felt. At the moment, though, some days like yesterday, we had the net of the outflow from Grayscale, the inflows of the other fund was 158 billion. So for the past, 158 million. For the past couple of days, we've had net outflows. We'll see when the figures come in from yesterday, right, what that will mean. But the one thing to remember is that, you see, that's only part of the trading, because remember that Bitcoin is the $1 trillion asset, and here we're talking about 25 billion. Although it's a big number, 2.5% of total Bitcoin's market cap, is only 2.5%. Is not the whole thing. And if you look at it, even with the last these 2 days, if you look at Wednesday and Thursday, even with net outflows from the ETFs, there seems to be a very strong bids coming in at the low 40s and high 30s level. Okay, this didn't take very long to, yes, it dropped to 38.5, but it didn't take very long to go back to about 40. Okay, that means that there is, the what we call the whales, the long-term, the big investors in Bitcoin are accumulating at prices. You can see here the difference between the kind of the black solid color and these shadows at the end. Okay, this is where the price has been during that day, but then it closed where the solid color is. Okay, so that means if you look at below that line, I can show you here. Okay, so below that line, you see, is where the big investors are accumulating. So they're happy to buy at below 40,000 and accumulating Bitcoin. Now, we don't know how long this will take, how long it will take to actually show in price. And remember that there are lots of forces at play. I'm to say, again, I'm not a conspiracy theorist, but remember that Bitcoin is a direct challenger to the banking industry, the investment industry. And do you think that with trillions of dollars at play, with a stock market that's worth a lot more than Bitcoin and all the cryptocurrencies put together, you think that they will let that go easily? So obviously they're trying all these games, and I'm pretty sure that there was an agreement behind the scenes before the the ETFs were approved, of thinking where are these Bitcoin coming from that the ETFs will need to buy. And I'm sure that there was an agreement made with Grayscale so that the Grayscale outflow would cover all the ETF inflows, because otherwise, with this kind of inflows, even as I remind you that we are talking about, the net inflows are not that huge, but they've been 800 million. Okay, 800 million alone, just this, of new investments into Bitcoin would have taken Bitcoin, I'm not saying to the moon, but very close to it, at least in orbit. Okay. So what are we got to expect for the next few months? I mean, there are a couple of scenarios that are possible. At the moment, as I said, this will need to play out. Okay. So all these funds at the moment are sloshing around between the Mt. Gox money that Bitcoins that might start to get distributed, and these ETFs that will need to settle down. We could have a couple of scenarios. One is that we kind of like settle at this level here between, let's say, 38 and 40, and we keep like bouncing around for a little while before the at least for another week or so before we start moving up. The other possibility is that there is a much deeper retracement to the low 30s, and we're going back into this range here between 32, let's say, and 28. So this is still possible. It's still in play. It's definitely not out of the question. And a lot of it, depends on, what, how much they want to play dirty. Let's put it that way. Okay. Now, the one thing you got to remember now is that where before it was a battle in a way between crypto and the establishment, now we got part of the establishment that are joining the crypto battle as well. Because obviously, the BlackRock, the Fidelity in this world, obviously are interested in Bitcoin doing well now, because that will attract more investments. Of course, now that they got something to sell, they're not against this anymore. And so kind of like the balance of power is shifting. Okay, so that even if the SEC is against it, and so many other players, senators, or like we know about Senator Yellen, etc. And even with so many voices against cryptocurrency, there is still a very solid base. And as I said to you in the last couple of weeks, we have 57% of Bitcoin that hasn't moved at all in the past 2 years. What this is happening now, we got an extra billion pretty much has been taken out of circulation. And although it's just like 1%, this is because this extra billion is the one that's going into the ETFs. Okay, that has that to be used to buy Bitcoin. So now from 57 we go to 58 and so on. Okay, so the supply will get smaller and smaller until there is a supply shock. Because remember that ETFs are passive instruments. So if you invest in an ETF, the ETF manager has to go out and buy Bitcoin. They can't just like play games with that money. Okay, so these are the two scenarios that I can see, but and we are getting closer to this red line here. Actually, let me make it a little bit thicker. This is important. Okay, so this is again the halving event, and after the halving event, obviously Bitcoin miners will get half the reward for creating a new block. So again, that will remember that the miners are some of the biggest sellers of Bitcoin because of the ones that produce Bitcoins and they need to sell them to finance their operations. Okay, so the miners are one of the biggest groups of sellers of Bitcoin, and their selling power will reduce in half after this halving event. Okay, so all these forces are showing a reduction of supply, and at the same time we're seeing an increased interest, which will slowly, again, these ETFs, will take a while to, to make the effect felt on price, but decisions that are taken from like big pension funds, from individuals like me and you in the US that didn't have that opportunity a couple of weeks ago, and so on, the effect will be cumulative, and it's something that would help to push this bull market harder and for longer than it has done before. Now, let me see some other things, and things that we see in the background, which is, again, it just shows you how this technology is slowly weaving its web into everyday use. This is just new. There are many of these kind of partnerships that are going on all over the world. This one, again, there are some this partnership will allow crypto payments to pay for bills and to pay the council payments and taxes and so on. At the moment, it will be Bitcoin, Ethereum, and USDT, USDC that will be used for this. But again, it doesn't really matter even what coins are used or not used. The idea that they are used at all, that these are things that you might see in your inbox if you're living in Singapore, saying, well, you can now pay your electricity bill in Bitcoin or in Ethereum. So how different is that from 2021 when Bitcoin was described as rat poison squared, or was it the JP Morgan CEO that equaled Bitcoin to the is there anybody from Holland here? To the tulip to the tulip in overinflated prices in the 1600, because that was the scandal at the time, inflating artificially the prices of tulips. So the one thing that we can tell, obviously price is, unless you have a crystal globe, you can't tell what price is going to be in 6 months' time. But the one thing that you can chart is the number of users that there are, and this is growing all the time. It's estimating now that we reached about 500 million users in crypto, and again, this is a curve that only accelerates, because when we go into the life cycle of a technology product, the initial adoptions is what takes the longest, because it's a new thing. But as more and more people adopt it, then it becomes, as we say, more like of a household thing, and then going from 500 million to 1 billion will take a lot less than it has taken going from 100 to 500. So let me see the thing. So this is kind of like if you start reading the crypto news, I mean, you can see something like this, and this is just looking at 8 chains, okay, not even the whole thing, but just say last year, 62 million, was added, 60 million extra users. So if you look at all the other chains, probably you can add another maybe 7 or 8 million to that. And if you're thinking, compare it to maybe 400 and something million, that's a big number. That's 15%. Okay, so we are growing at this kind of rate, 15 to 20% a year. This is like put it into perspective, and this is why crypto is important. This is where the national debt is going in the US. If you're thinking, why are we not already in a recession? Simply is that because they keep throwing money at it. So by throwing money at this, and now we almost got to, we got almost to 100 trillion. Okay. And so we are getting, to a point that almost like for most people, it's kind of like understandable. The numbers are so big that they cannot be understood. But the one thing I can tell you, without going into economics or anything, it's just saying that by throwing money at problems and getting the debts and bigger level, what we are doing is just simply kicking the can down the road. As simple as that. So we will get to a point like it happened to a number of times in history that the fiat money experiment fails. And we're getting to a point where it's not a matter of if, it's just a matter of when. Okay, we have gone with all the efforts that have gone on. The current experiment has gone a little bit further than previous ones have. So we have to get to a point of reset, whatever you call it, because this now is really cracking at the seams. So the discussion then will be, and this is where we have to be very careful of what is said in places like Davos, etc., because the discussion will be, what will the new system look like? Okay, and I don't believe that there can be another fiat system that replaces this. Even a lot of people talk about the BRICS currency, etc. Unless we are looking at something that is backed by a hard asset, I don't see that any fiat system would be able to follow this on. So again, with this, it's very important to zoom out and not just looking at what we can make the next money that we're going to earn, but look at it. Where is this technology going? And for me, it's the one thing that Bitcoin has proved. And I'm talking of Bitcoin in particular at the moment because it is the one that has, at the moment is being recognized at institutional level. Bitcoin has proved or providing a real alternative to, at the very least, physical assets like gold. So they have managed to enshrine scarcity, and creating a digital scarcity that is perfect compared to the imperfect one of gold, because gold obviously is an asset that has inflation. Okay, because there is new gold being dug out, every year. So at the moment, what's going to happen, by the way, in April, at the end of April, when the halving event happens, now that Bitcoin will have a lower inflation than gold. At the moment, they're very similar. Okay, they're very similar, about 1.5% a year. But after April, this, the gold inflation will be about double the one in Bitcoin. Okay, so you start putting it all together and see what you think. Okay. Now, the other big thing that's being talked about is the Ethereum spot ETF. Okay, so that's being put forward again, and this is kind of like this is a lawyer that's showing us what the pathway is for for the spot ETF approval, based on what Bitcoin had to do to get to that point. And so it took like 7 years for to going from the for the spot Bitcoin approval to happen. Now it's not going to take 7 years to get the second one, but it's not going to be a given that happen just like this simply because Bitcoin has been approved. Now we're going to have spot ETFs for all the other cryptocurrencies. But still, we have now a pathway that we're seeing that has been successful. The other cryptocurrencies can use to get to the same point. Now, again, this is not going to happen. It's already been pushed from February to May, but we'll see how long it takes to, for Ethereum as well to, to have an ETF, and then if other ETFs follow suit from there. So will we have a Solana ETF, an XRP, a Cardano, and so on. So anything at the moment, I can only say that as the user base grows, especially if Bitcoin starts doing well and people see a positive return from participating in the ETF, there is going to be a growing demand for other offerings as well. So I don't know how much the SEC can stem the tide up to a point, because they've been losing case after case after case in court. And I don't know how much strength they have to keep slowing everything down. But we'll see. We'll see in the next few months. The last thing that I'll show you for today, and then we'll get some questions. So this is, again, and it's, you almost have to go and look hard with a magnifying glass to find news about Cardano in the general crypto news, because the crypto news are dominated by Ethereum and Ethereum maxis. Okay, so Cardano, for everybody else that is not a Cardano enthusiast, is the devil, because it's a product that is better than Ethereum, that is growing faster than Ethereum, and and is attracting now a lot of institutional interest as well. So this is now for somebody that was saying, "Oh, Cardano doesn't have smart contracts." They increased by nearly 10,000 this year. So it's if you want to know more about Cardano, please go and follow Jonathan. That does a session every Friday at 9:30. All on Cardano. But this is something that is happening again in the background. You don't really hear a lot about Cardano, but Cardano is going on and quietly doing its work. Okay, the one thing that you don't hear, especially, is when Cardano outplays Ethereum. Like for large transactions, the volume on Cardano far exceeds the volume on Ethereum. Even if the total market cap of Ethereum is 20 times the one of Cardano, the price is something completely different. But if you see the network activity at the moment, this is what is getting a lot of Ethereum people kind of nervous, because they have got quite a few now contenders. But from the point of view of the other contenders, if you look at the Solana and some of the other networks, are not quite. They don't really offer anything that is superior to what Ethereum already has, where Cardano does. Okay, so from the point of view of security, there's no one that the only contender to Cardano is Bitcoin itself. But from the point of view of security and the kind of technology that big financial institutions, nation states will need to be convinced of using the blockchain, there aren't that many that are able to offer it. And Cardano, with over 200 scientific papers that have been published, and these have been published not only by them, but they've been peer reviewed, obviously, and is by far the leading blockchain to get to the next level of blockchain activity and I would say growth of use case. Okay, so Cardano, I think for me, it's in the best place to then deal with going from the millions and hundreds of millions to the billions of users. And Cardano, I think, is positioning itself in a fantastic position. Okay, so let me stop sharing now. I've got 10 minutes left. So let's get a few questions. Let me see if there are any here. Okay, Pierre was saying we will reach a stage when dirty play in the crypto sphere will not be possible anymore. Yes, we will, but we are away from that. So just for example, even the US cannot influence really the price of kind of like long-term bonds. Okay, because the volume and the size of it's even beyond the US government. So we're not at that level now. I mean, crypto at the moment is still like a pebble compared to some of the other investment classes. But yes, we might get one day to that point where it's very difficult to to influence long term the price of some assets. Bitcoin is one that's reaching that inflection point because simply that the supply has seen, and there's obviously the community, Bitcoin community is very entrenched in the sense that they want to see their Bitcoin to 6 and 7 figures. So they're not selling at 40, 50 or 60,000, but they are in there for the long run. So once the bigger the market cap, I'll say, for any single cryptocurrency, the more difficult it is to manipulate because you need more volumes, you need more funds, and the reason is not just it's not just that, but who has a benefit to knock down Bitcoin as well. And those benefits are getting now smaller as big players can actually profit from this rather than just being at the window. Okay. Thank you for the history lesson as well, Pierre. Do we have any other questions? Something else that maybe I haven't covered, or do you see as the trigger to unlock Cardano's growth? What do you mean to unlock it? It's already growing at a fantastic pace. Just the price are you referring to? So price and network activity, obviously two completely separate things. The price growth comes from being recognizable. Apart from, yes, in part will also come from activity. The more activity there is in the network and the more something used, but really the real price growth comes from new users. Okay, so new users need to understand what's going on. At the moment, Cardano is something that it's like a well-kept secret, within within cryptocurrency. Obviously, if you ask people that don't know anything about crypto, they would have heard about Bitcoin, they would have heard about Ethereum, and not much else. Okay, and this is where this is the next thing. So the moment where I would say the old lady from wherever it is, needs to use Cardano to pay a council tax bills, those are the kind of things that will get the users to the next level. So this is kind of a merger within all the innovations that have been introduced by the whole blockchain industry is unbelievable. But once those innovations are starting to get to our everyday life, and many projects, like there was in the news, there's talk about helium. Some of you may even have some helium tokens. They now have reached an agreement with Telefonica, which is one of the biggest mobile phone providers, to provide access to, I think it was in California. So you can see now the more and more what we can see is crypto projects merging with the kind of real economy use cases, and people will get to just use blockchain technology more and more, even without realizing, because if you have a phone, you just care that you have connection. If you want to be connected to the internet, doesn't matter if it comes from helium or it comes from somebody else's technology. The thing is that this technology is starting to get used in the real world, and that will only grow because with more use, there is more rewards. With more rewards, you get more investment in other similar projects, and this is a disruptive technology. So the moment that it penetrates one market and people realize that it's cheaper to use this than something else, and it's got other advantages as well, then it will just like spread like wildfire. Like who uses, very few companies use their own servers anymore. They all like use cloud servers. And that was unthinkable 10 years ago, and now is the norm. So the norm in 10 years would be for everybody to use blockchain. So this is the new, the reason why I'm so involved in this and I'm so interested in this is because I don't see just like a fad, but I see this as the next business technology. And there is like pretty much every 10 years, there is one technology that, obviously businesses are driven by getting more sales and reducing their costs. And this is one technology that will do exactly that for them. So and this is the reason why they're coming on board now faster and faster and faster. And so that's for me is the trigger, is getting to the point where, like it was with the internet, at the beginning, did you have to have a website if you had a business? You didn't. Now, if you don't have a website, you don't really have a business. And it will be the same thing there. If you're not on the blockchain in a few years' time, you passed it. So, that's it. That's it for me. Okay. Any other and Jonathan, please put your link as well. Just to remind everybody. I think everybody here has been onto your session. But if they haven't, it's always good to be reminded. Okay, we got 1 minute. So one last question, anybody? Don't be shy. That's a difficult question, Chad. A difficult question because, and I'm not saying, because we're talking about 7 companies now. They are most of them. They are, if there were countries, they would be in the top 20 countries in the world. So it's very difficult to to see where this is going, and a lot of it will depend on the easing cycle and how quickly that will come around. Because although we have seen kind of like higher and higher numbers in the US, there are cracks showing all across the world. Economy slowing down, say not just in so much in the US, but everywhere else in Europe and in Japan, in China. So if they keep these tight conditions for much longer, they would push the world economy into a new recession. And in that case, obviously, even if these companies are amazing, but their products are being bought by people that have got less money to spend. So I don't know, because their results and the share price don't necessarily go, hand in hand, and the price earning ratio is at the highest we've seen for a long time. So they are very expensive right now. Okay, so for me, I'm not that interested in buying more of that now, simply because you just assume that the base case scenario will carry on for the next 2 or 3 years, and it's difficult to predict, because if we start cutting, then that will be kind of like fuel to the fire of the stock market. So we might see again another run in the stock market. So yeah, as I said, as I was showing before, for me at the moment, it's a time to be nimble. Okay, so not to get entrenched in investments that you're going to be in for a long time, but just really have a look at how the wind is blowing and be ready to change very quickly. I'll say gold may be a very, very good option this year. As I say, bonds are, are kind of like a no-brainer right now, because as the interest rates will start to be capped and the bond prices will go up. So there's a good time to actually, I will say, get still a decent return, because with bonds you can still get around 5% return, risk-free. plus potential capital appreciation. Silver, I don't like as much simply because it's much easier to manipulate than gold. And yes, of course, you can have, if you want to have a bag of silver or platinum or other metals that are widely traded, like at the moment, one of the success stories has been palladium. Copper as well has gone up a lot. Yeah, I mean, I would say, precious metals should be part of everybody's kind of a long-term portfolio. If anything, if for nothing else, as a hedge, especially when times are uncertain. We'll see. Maybe we'll get back in 12 months. We'll see what we'll be talking about in January 2024, and was he right or not. But yeah, I think at the moment is what we teach in the AIW is probably the most important thing. So to have a proper investment pyramid and a balanced portfolio. By the way, something that before I stop this call, we'll probably I need to check my membership, but probably I'm not going to renew my Genius U membership. So these events would not be on Genius U anymore. That will be on the International Academy of Wealth Facebook page. Okay, so if you're not on there yet, then register on the Facebook page. It's free. So at least you can carry on watching. Probably I'm going to have another couple of weeks of this, and then I don't think I'm going to have access to a Genius U platform anymore. Okay, so at the moment we come to the end of this session. So for those of you that are part of my coaching, personal coaching into AIW, we're going to have a session on Monday, and I haven't put it up on Discord yet, but we're going to have a session on Monday night, and we're going to talk about the what's happening going forward now, etc., etc. And I believe that Mark has a webinar for your membership on Tuesday as well, when he will announce a few changes. So if you want to come at Monday evening at 8 o'clock in the UK, then we'll talk how to keep we can talk about how to keep working together. All right. So good night, everybody. No, good night. Good morning. And by the way, on Sunday, you're all what do you call Carol boys, okay? So we're all supporters of Yannick Sinner, who are just beating Novak Djokovic, okay? So I've got up at 3 o'clock this morning to watch him. So,
that explains why there was lots of clapping coming from my kitchen when I was like, what is going on?
Yeah, exactly. It was like unbelievable. I think Novak Djokovic hadn't lost for over 10 years in Australia. So now on Sunday, we have a group of fans in Italy. They are kind of like the carrot, what they call not the carrot boys, I can't remember, but they all like dress as carrots because obviously Yannick Sinner has got like red hair and he was caught sometimes eating a carrot, at the change of hands. So now these have become very famous, and the supporters have all got orange, basically. So you become all orange on Sunday, and supporters of Yannick Sinner, whoever is on the other side. I believe they will. I don't know if they already started playing or they will start soon. But the other finalists will be decided in the next few hours. Okay, so have a great weekend. Remember to get up for Yannick Sinner. It's not going to be too early this time. I think it's going to be around 8:30 in the morning, 9 o'clock in the UK time. So everybody got no excuses. All right. So have a good weekend, and